Something is happening in the American economy that almost nobody is prepared for. Inflation is cooling, but prices aren't going down, debt is at record highs, homeownership is collapsing, and a massive wave of layoffs is finally starting. So if you think things are normalizing, then you are in for a brutal wake-up call. This is the first time in a while where I've kind of looked around and felt uncomfortable about the American economy. Don't get me wrong, I graduated college during the pandemic in 2020. I haven't seen a massive structural crash like the people who lived through 2008 or the dot-com bubble. But the math we're looking at today feels heavier. Let's look at what is actually happening. The first thing is that while inflation is slowing, prices are staying up. It is a common misconception that lower inflation means things get cheaper. It just means they're getting expensive at a slower rate. We're still paying 25% more for groceries than we did in 2019. Rent is up 20 to 30% across the country. Meanwhile, wages have only grown by about 15%. Even with inflation cooling, people feel broke because the gap between what we earn and what we spend has widened. The middle class is getting completely squeezed. The median American can no longer afford the median home because interest rates are high. Mortgage payments are 2.5 times what they were 5 years ago. The home ownership rate for young people is dropping fast. The median age for a first-time homebuyer has jumped to 40 years old. Back in the 90s, that number was in the early 30s or even the late 20s. If you are making $45,000 a year, the dream of owning a home feels like a mathematical impossibility. The next alarming trend is that debt levels are exploding. Total household debt is now over $17.5 trillion. Credit card balances are at record highs, and auto loan delinquencies are at a 20-year peak. Many people are $1,500 emergency into a complete financial breakdown. On top of that, layoffs are quietly increasing. I'm seeing job cuts hit levels we haven't seen since 2003. Tech companies are laying people off by the tens of thousands. Amazon and Verizon have cut massive portions of their workforce. This is a crisis because people are feeling higher prices, higher debt, and slower wage growth. And the worst part is that borrowing money to survive is now more expensive because of high interest rates. I am not here to fear monger. I am here to talk about building wealth for the long term. I follow 2 simple rules: live within your means and invest what is left consistently. But when I look at the job market and the debt levels, it's hard not to do so. Part of the reason for this pain is that the Fed raised rates aggressively to fight the inflation caused by the 2020 money printing. Americans got addicted to cheap money between 2008 and 2021. It was easy to get a loan, and the stock market felt like it only went up. People got used to winning financially without really trying. That era of free money is over. Now companies are cutting back to protect their earnings and impress Wall Street. One easy way to cut expenses is to stop hiring or start firing. I work at a Fortune 500 company myself, and I can tell you the pressure to cut jobs is real. The housing market is also completely out of sync. People with 3% mortgage rates aren't selling because they don't want a 7% rate on their next house. The inventory is low, the supply isn't growing, and first-time buyers are being crushed. Then we have the government debt, which is over $34 trillion. We spend more on interest payments now than we do on our military. The options left are to raise taxes, print more money, or cut services. None of those options make life easier for us. People are losing confidence in the economy, the housing market, and the politicians. When confidence drops, spending changes, investing slows down, and the economy stalls. I see a few scenarios playing out. The first is a slow, double recession, not a sudden crash, but a long period of struggle with flat wages and high prices. The second is higher unemployment, as companies continue to lower their headcount. The people who will feel this most are the younger workers and entry-level employees. I've talked to friends who are 23 or 24, and they say the job market is atrocious. We might also see a housing freeze where nothing moves until rates drop significantly. The Fed is terrified of a 1970s-style inflation spiral, so they might keep rates higher for longer than we expect. If you've watched this far, I want to talk about how you can protect yourself. You need to put yourself in a position to thrive while others are panicking. First, strengthen your own personal balance sheet, get rid of high-interest debt, and build an emergency fund even if it is just $1,000. Avoid lifestyle creep at all costs. If you get a raise, don't increase your spending, keep your expenses flat. Second, try to become layoff-proof. Build skills that are revenue-generating or cost-cutting for your company. Make yourself so valuable that replacing you will be a nightmare. Keep your LinkedIn active and build a network before you actually need to use it. Third, use market volatility to your advantage. Wealthy people buy when things go down, while the middle class sells out of fear. Keep your investing simple. I personally put my money into index funds like VO and use dollar cost averaging. I invest every 2 weeks when I get paid, regardless of what the news says. Finally, focus on increasing your income. A lot of people stay broke because they only focus on cutting expenses. Winners focus on income, ask for a raise by showing the data of the value you provide. If that doesn't work, consider switching jobs every couple of years. That is how I grew my income significantly, because a new company doesn't know your previous salary, and you have more leverage. You could also start a skill-based side hustle or get certifications that increase your hourly rate. The goal is to build a recession-proof life plan. Live below your means during the good years so you can stack cash for the hard years. Don't make big emotional decisions when the economy is unstable. Think long-term. Think about where you want to be in 2030, not just next month. Every economic downturn in history has eventually led to more innovation in higher markets. Downturns are where the future millionaires are quietly built. I do think we are entering a financial crisis, but that doesn't mean we are all in danger. The people who stay disciplined will leap ahead of everyone who panicked. Don't fear what is coming, just be prepared for it. I hope you found this helpful. If you did, feel free to subscribe. I'll see you in the next one. Peace.